this is Joe Pryor with the Virtual Real Estate Team in Oklahoma. And when we started out January last year, it was rough. I'm telling you, for someone that specializes in investment property in those major markets of Oklahoma, we couldn't get anything. In other words, it still was kind of continuing on from, even though it was post-COVID, still people were overbidding on houses. Builders didn't want to deal with me, even though I have probably one of the better reputations for, getting high quality investors that close on their properties in the market. But we just couldn't get anything. Everything was selling, and builders, as a rule, want to sell to owner occupants, and we're cool with that. We think that's a good idea, and the reason why we think it's a good idea is the worst thing that can happen is you oversaturate a neighborhood or a market. Supply and demand, you've got too much supply, and it's just not going to work for rental real estate. But they have to allow for us to be able to sell some homes, mainly because builders, they want their volume. But as the year went on, it got a little better, but it was really the second half of last year that really made a difference. And especially as we went into November and December, then the deals started coming. And we started seeing a little bit more openness to us with our quality of investor and saying, yeah, we'll go ahead and entertain this. And so our builders started opening up back to us again. And that's the good news for January 2024 going forward, is that's the case. Right now, we have a level of inventory that is so remarkably different than last year. It's basically night and day. And there's deals, like for instance, we've had one builder in Oklahoma City just did a $20,000 price reduction for us. And our investors just came right in because, we need this, because even though rates went down a bit from in December and January, still a little bit high. And so price reductions really make a difference. And these are really good new homes. Same thing happened in the Tulsa market. So we're seeing builders at this point wanting to build their inventory sales. And so they are looking to us. Now, again, supply and demand. We work with our property managers and say, we don't want too many homes in any neighborhood. We try to typically peg about 10% as a maximum numbers. And we have programs in our MLS system that allows us to look in those markets. So for instance, I had somebody that say, I want to know how many rental properties are in this one particular neighborhood. And there were about 300 homes. And I look for LLCs, I look for people that don't use the home as their address. That's normally the case where you find it, how many investors are there, because not everybody advertises in the MLS. And I found, out of 300 homes, there was 21 homes. So I thought, okay, 2 or 3 or 4 more homes is fine. Cut it there. There's also more homes being built in the neighborhood, so it's going to get larger. Those are the ways that we look at it. So they're opening it up again to us. We have some deals for people in both the Oklahoma City and Tulsa market. We don't want to oversaturate. It's not good for us. We like people that just keep buying from us. The way that happens is you honor basic economic principles, supply and demand being number one, and that's the way that you make people happy, and that's the way that you build wealth for these people. Owner occupants drive the appreciation, lower supply drives the rents, cash flow, appreciation. 7-10 years later, you're in terrific condition.